Our company is Daytrader. We're now in our 23rd year of providing market forecasts for traders just like you around the world. Can be very useful to know what the market is likely going to do under a given set of conditions. So please be sure to read our trading disclaimer. Trading is risky. You can lose money, and this is at the bottom of each of our website pages. So keep that in mind. Thanks again for coming. We weren't able to be here yesterday, and I apologize for that, but that's primarily because the markets have been moving. We still have that condition even in today's session, so we're going to have to keep it relatively short today. We've had a lot happen. I can tell you that for those of you that are not in our meetings, without us, not subscribing and so on, you could have known days ago that all this was going to happen, but you didn't know because you weren't here. And that forecast was for the market to decline into April 4th, plus or minus a day. And I gave out all the numbers, significant decline into today's session. We've been down to what we talked about, 45.03, but we're talking about this going back to the 29th and 30th, giving this information out for what the market was likely going to do. Now, I will tell you this, so you can follow along. The market is not done, even though it has reached a mildly important level on the downside. Chances are that lower prices are still due into next week, and we've given those lower prices out, and we've said specifically that those lower prices are going to happen, that they will happen. So the best I can tell you is that it gets us into the 4400s and so on. So we're kind of excited about that, and then that, for those of you that have reflected wave, that will trigger a daily reflected wave bottom, and that will set the market into motion for a very important advance. So yeah, a lot, just really an amazing thing. A lot has happened here just over the last 2 days. We've done really well with this decline, and I can show you a portion of it here. This right here, Thursday, 331, the decline from current prices. This was intraday, 4,600 should decline down to 45.51 to 49 into tomorrow. And you can see they went from where we entered this information. This is what the market looked like at the time, something very close to this, and said it was going to go down 50 points. And that's what it did. And of course, the larger decline below that we've talked about in our meetings and so on, and continue to. But we still actually have lower prices coming. I had missed one of the indications, and that indication has us going lower into next week, lower than the lows of today, 45.01.25, into next week with a very specific target on the downside. So I hope you're around next week for that. Well, it should be pretty exciting trading and so on. Today we had some really beautiful stuff. We shorted the market at a number of places. Let me point this out to you here. Let's just go to, say, a 30-minute chart. When the market was rallying over here, I think it was here. During this rally, we were shorting, let me break it down to a 15-minute chart. We were shorting the market, saying that the market shouldn't be able to get above 35, 45, 35. Let's even go to, say, a 10-minute chart. Maybe you can see this a little bit better. And the market swung up to 45, 34, 50. That's where it gets spilled all the way down and did our numbers, which were 12 to 10 and 05. And the market got all the way down to 01. So we've done everything that we were looking for the market to do in today's session. This will be up on our Twitter, this particular forecast, but great stuff because the market rallied pretty strongly in here. And listen, when you're in a trade and you're shorting the market and the market's, running up hard, it takes a little something from you because you have to have the courage of your convictions that the trend is really down and that the market really is going to not go much beyond. They actually didn't even quite hit 35, but you have to be ready for some test of those levels. And it took some time, and it was, it was a little torturous, maybe. It always is. And then suddenly the move happens, and then you're in gear and you start booking gains and so on. This is why it's really important to trade on a multi-contract basis when, if you can, because you have to take something off at initial targets just to protect the remainder of the trade, so that you're not constantly sitting out there with a total position on, even though some people might do very well holding on to all their contracts because they make more money. But judging how to trade correctly is not correctly done by just saying which way makes me the most money. That is not going to serve you well. Just constantly saying, what's the best way that makes me money? What's the best way I protect my position? What's the best way I manage risk? Those kinds of things. What's the best way I target what's going to happen? Those things are going to serve you well. But just simply saying what makes me the most money, which is about 99% of people are thinking, in the traders think that way. They're just simply, which makes me the most amount of money? That's the right answer. And what makes you the most money doesn't have anything to do, in most cases, with what protects your position the most, what manages risk the best, and so on. It just simply, hopefully, in your mind, makes you the most money. I would postulate that the majority of problems that traders have is because all they think about is money. That's the problem. They're not really thinking about everything else. They're really just grinding. They're just looking for money. And I've told you, I'm not going to hammer on it today, but that's what causes most people grief. There's a lot of other things you could be thinking about. A person could be managing things a lot better than just to constantly be saying, what makes me the most money? And strangely, when you stop thinking about what makes you the most money, you start consistently making what? Money. That's how it generally works. But, again, men in particular, they work best with a goal, and their goal is always, the money. Why not have a goal? There's nothing wrong with a goal. Why not have a goal to manage the risk and keep your account alive? There's a lot of things on the internet that show people who take on unfathomable risk, and once in a while it works in their favor and they make an incredible amount of money. Come back 2 months later and they're broke because they tried it again and again, and it just wasn't good because they don't know really what they're doing. Please don't be impressed by somebody who makes $1 million or 400,000 or 300,000 or some amount of money by doing stupid things. Don't be impressed by that, because it's not impressive. I mean, it would be just as impressive to see somebody jump off a mountain and land in a bunch of bushes and trees and be just fine. And you say, wow, he jumped off that whole mountain and he's okay. That doesn't mean it was a good idea. And that doesn't mean that next time he'll be alive. When you go look around, you see there's all kinds of sites that, and then there's sites that show people that lose a lot of money as well from making poor decisions because all they can think about is money. Now, I do want to say, I've done all these things. I'm not speaking down to anybody. The only forcefulness in my approach to this is that I'm so tired of hearing people talk. When I speak to traders on the phone, I mean, it's nauseating, honestly. Oh no, all I need, man, I just need to make 2 points a day. That's my thing. If I can make 2 points a day, then and that's all they think about. You can't get them off of it. You just can't do it. It's like being a pedophile. You can't change them, right? You just can't change those people. Well, that's what I worry about with a lot of traders. They just can't get onto something else and make money, the happy side effect of them focusing on better things. I mean, we all want to make money and so on, but it's not, focus on that is not going to get you to the goal. You have to focus on things that would allow you to be continuing to do this and do it properly in order to get there. So just consider that, particularly if you're new to the markets. And listen, I've had a lot of very pleasurable interactions with traders over the long number of years, the 23 years we've been doing this. Some people are much more mature than that and much more oriented towards managing risk and understanding the nature of markets so that they can have a better chance of being correct. I mean, if somebody said to me, listen, you come here, you come to the market, and if you get, if you happen to be right, then you make some money. I would have no interest. I'm not interested in happening to be right. That doesn't interest me. That's just gambling. I'm interested in being able to know that I'm right because I've understood something. Aren't you interested in that? Or are you just interested, well, just in money? And if I happen to be right, that's good enough for me. It isn't good enough to just happen to be right. It's not good enough for you. It's not good enough for me. I'd like you to be at the level where you say, I'm not interested in accidental gains. I'm not interested in being accidentally right. I'm interested in being purposefully right. That's what I'm interested in. That's what I'd like you to be interested in. And it's a real pleasure together and to get it right and to deal with the realities of it in real time as it's occurring and really get that, that craft down of being able to deal with the markets and understand its real position. So at any point in time, the market has a reality to its position, right? As an example, let me draw this out for you. Let's just say we have a market that's done this. And that's, here, let's do a little more. And let's say that's the total position of the market. And I'm not purposely drawing a wedge or anything. Okay, so just take that off the table. But let's just say this is where it is. In reality, not necessarily what you and I know about the market, but in the reality, the market is expressing an actual total position that it has. And that position indicates what is likely going to be next for the market. Maybe that is something like this. Okay. So at this point, you can't say for sure that this is going to happen, but you might be able to say with a very high degree of certainty that that's going to happen because you've understood its actual position. Or maybe the market has done this. And you might think, well, they're doing really well, but its real position is that it's done on the upside and it's going to go do this. That could be its real position. That knowledge that this is likely what's going to happen is not necessarily going to be contained on your indicators or on a candlestick pattern or anything like that. The total position of the market is what gives you that information. Just like if I want to know what the ocean is likely going to do, it would be a good idea to look a little beyond a 10 by 10 area of the ocean, right? If I'm looking at a 10 by 10 area of the ocean and I'm saying I want to know what the ocean's going to do, a lot of the information about what the ocean's going to do is not contained in that 10 by 10 area. You're not going to find the information in that 10 by 10 area. So it's the same with the markets. This is why I've said before that while I love the kind of the, I don't know what the word is, not the romance, but the, the beauty of candlesticks and the idea that, historical nature of them and how rice traders use them and all this other stuff, and they ascribed meanings to them, and they were very astute in doing so. And I give them all the credit for that. But they're nearly meaningless unless you understand the total position of the market. So one price bar or two price bars don't speak for the whole market. Now, if you've understood the total position of the market or a good portion of the market position, then those could be useful to you. If the total or mostly total position of the market is talking about the market needs to go down, and then you get your candlestick pattern, that's great. That would be helpful. But the right order is to understand the total position of the market first, then understand what the shorter term indications might be pointing to. because those shorter term indications do not speak for the total position of the market. You and I don't speak for the entire universe, right? We're smaller and we're a partial position of the total universe. We don't speak for, nor do we direct the activities of the total universe. So if you want to know what's likely going to happen in the market, you're going to have to go beyond 10 by 10 and beyond individual indications which don't speak for the whole. And that's when you get that in your head, you'll start understanding why it is that we focus on certain things regarding the longer term charts, which most people are not interested in because they're down at their 1 minute chart wanting to buy a moving average crossover or whatever they're trying to put together. And you can imagine that that's like looking at a 5 by 5 piece or a 1 by 1 piece, for that matter, of the ocean, trying to understand what the total ocean is going to do. All right, let's see what's on your mind today. Doesn't have to be about anything that I'm talking about. Rob is here and he says, how about the soybeans? Yeah, we had forecast in our room about soybeans going down to, is it 16? Let me get my notes up here. One moment here. One moment for notes. Just a second here. Just want to see what a monthly closables. Yeah. So further decline to 1570 to 1560 into May. That's what we think is happening. That's right here. That's my notes that I use. And we've already, gotten pretty close to that in soybeans. If we were to put up the May contract, let's get over to the daily here. Well, we're already down at 1585. Now, these notes, I mean, they go back a week or more, so we didn't just type that in today. But this is the main forecast that the market's being called lower. Oh, by the way, because the total position of the market is indicating that this is what wants to happen. Not because there's a special candlestick bar right here or a special candlestick bar right here. They don't speak for the whole market, and they don't make this happen. What makes this happen is the whole market. It would be like somebody looking at a single part of your body, let's say your ankle, and trying to figure out the magic of your ankle, because hidden in your ankle are special clues and signals as to what the rest of you are going to do. Maybe they don't understand that you're a human being. They're just looking at this little piece on your ankle, the little section of your ankle, and they're saying, well, there's hidden messages in that part of this thing that I'm looking at, because sometimes it moves around and it goes this way, it swings back and forth regarding the movement of the foot back and forth, and they're trying to forecast what's going to happen by studying that ankle. But until they recognize that what they're really looking at is a part of a total thing called a human being, and they want to understand the nature of the human being, once they do that, they're going to be much better off at understanding what that whole human being is going to do, and therefore, ergo, what the ankle, if you will, is going to do. See, that's what it's like with markets. So anyway, so we're very close to the 1570 to 1560 level in soybeans. Real happy to see that decline. We have people short for that. Samuel's here and he says, hi, David, any update on oil? Is the bottom in? Oil needs to go lower into, and I put this out publicly, so I don't mind telling you we're going to be down. Oil has to go down to $94 and even $89 to $87 in the second quarter of this year. And if we put oil up on the page here, CLE, I can't remember if we're in June or if we're in whatever we're in. We're at 98 here, or May or June, whatever we are. Oil needs to go down to, say, $94. We made this forecast on Ameritrade with the great Ben Lichtenstein on Wednesday. I think I made it last time I was on his program as well, but I'm not 100% sure. 94, and it has to go down to about 87 to 88 during the quarter, during this second quarter. So that is what we're watching for in crude oil. That's a public forecast. And if you go to Ameritrade Network, you can, there's somewhere in there, our most recent video that we made on Wednesday will be there for you. So that's, if the bottom is not in, even if they have a little, and they may have a little bit of a bounce here, they still have more to go. I am working on figuring out at what point in the second quarter of this year we're going to see those numbers down on the downside. The S&P also similarly has second quarter numbers that are lower than where we are now. And I do want to talk about the S&P because we gave a forecast out today that in the room that the S&P is going to try to move up to 30 to 35 from the lows that we just put in, and we've almost already got there. We've gotten up to just now. So this is another, if you're in our room, in Jerry's, in the Williams Edge Plus room, you know that. Now, again, there was nothing that happened right here that told us that. This special candle bar or the last three didn't say that this is what's going to happen. They may say something, but they don't speak to this, because the only way you can know that this is going to happen is to understand the larger total position of the market. And then you can understand what the market's likely going to do, as I've said. Stu has also said, hi, David, and completions on Apple. Nothing in particular. We have a decline in some of the stocks that we follow. We've taken profits. There's been weekly and daily reflected wave tops that have been put in recently, and the market has moved down from those. Apple, Amazon, and a few of the others that we're following, Tesla, and so on, although Tesla has been holding pretty firmly here. So I like the idea of selling short rather than buying. I mean, this is just, in the S&P right now, because we know we're not done on the downside yet. Not necessarily for today, but not only for the quarter, but even into next week. So we like the idea of selling rallies for further decline. So I hope that's useful. So I hope that I know I've explained this many times, but I hope some of this gets through and that you can start thinking about the whole market rather than just always looking at just the momentary stuff that's in front of you, which I've done in the past because I didn't know, we all start not knowing anything. But I would like to pass that knowledge along, that the present market bar doesn't speak for nor direct the market. There are other things that do speak for and direct the market, or implicate or inform you that the market's going to do specific things. And I hope you'll study that and take a look at that idea, or come, like someone's coming this weekend to learn the square principle. Come actually learn the information, and you'll start to see much clearer. It actually makes its mind up, so to speak, about what it's likely going to do. So there you are. That's everything that I have. I do have to get back to it because we really are moving quickly here in the markets today. I hope you had a great week, one way or the other, and I hope you can be here next week because we'll be here as well. And I hope you all stay well. Thanks so much, everybody. See you next week. See you then.